If you don't know, an escrow account is kind of like, the only way I can describe it is like a bank account that's connected to your mortgage. So when I pay my mortgage every month, I'm paying the interest and the principal on my home, as well as the estimated taxes and my homeowner's insurance. And then every year, just to protect the mortgage company, they take that money I've paid them all year long, and then they pay my insurance premium and my taxes on my behalf. However,
a home. So I started listing off our friends who own homes, and every single one of them, he was like, they got help from their parents. They got help from their parents. Their parents gave them.
As someone who works with first-time homebuyers on a daily basis, this is something that is not talked about enough. I can't tell you how many of my clients, millennial and Gen Z homebuyers, have received help from their parents, not only gifts, but co-signing on the loan. And I was curious, I just sat down and went through my book of business and the clients that I closed over the last year, and close to 35% of my millennial and Gen Z homebuyers received help from their parents to buy the house.
Payment is $2,480. $225 goes towards our principal. $1,698 is interest.
Right here, I'm on the mortgage side of TikTok. I'm, I guess, on the wrong side because I can never afford this. Mortgage, $5,300. I'm gonna post all the pictures right here. Mortgage, $2,919. Mortgage, $5,073. I have to recheck. Hold on. I just went back and reread.
I knew what I knew now, and I could go back in time to when I first bought my house. I would do everything I could to not have an escrow account. Okay, that is the biggest pain in my ass every year. If you don't know, an escrow account is kind of like, the only way I can describe it is like a bank account that's connected to your mortgage. So when I pay my mortgage every month, I'm paying the interest and the principal on my home, as well as the estimated taxes and my homeowner's insurance. And then every year, just to protect the mortgage company, they take that money I've paid them all year long, and then they pay my insurance premium and my taxes on my behalf. However, after the first year being in my house, I learned you got to double check this stuff, okay? Because every year, out of the 9 years I have owned this home, I have to call and make sure my homeowner's insurance, like premium for the year, has been paid, okay? I just got a letter in the mail saying, like, oh, your policy is going to renew March 1st. We ain't got your money yet. Even though my homeowner's, or my mortgage, my escrow account says it was paid on February 10th. They're like, yeah, girl, we ain't got your money. You need to call them and figure that out. Whereas if I just had my own bank account and I set this money aside every month, like a sinking fund, I know it's paid. I know it's there. Instead of spending an hour on the phone trying to figure out where my money is. And honestly, until pretty recently, I thought you had to have an escrow account with your mortgage. I thought that's how it worked. Found out recently that's not the case. If you put enough down on your home, or depending on the type of loan you can take, you don't have to have an escrow account. You are just responsible for that on your own, which, as somebody who likes to have as much control as possible and likes to make sure their homeowner's insurance doesn't lapse, that would have been much.
So I said to my husband, I don't understand why everyone keeps saying that millennials can't buy homes when we live in California and literally all of our friends, not all, but most, own a home. So I started listing off our friends who own homes, and every single one of them, he was like, they got help from their parents. They got help from their parents. Their parents gave them.
As someone who works with first-time homebuyers on a daily basis, this is something that is not talked about enough. I can't tell you how many of my clients, millennial and Gen Z homebuyers, have received help from their parents, not only gifts, but co-signing on the loan. And I was curious, I just sat down and went through my book of business and the clients that I closed over the last year, and close to 35% of my millennial and Gen Z homebuyers received help from their parents to buy the house. And I'm not lying, these numbers are real. I had several clients that received between $100,000 to $300,000 plus in a gift from their parents towards the down payment, and had a ton of clients that had to have non-occupying co-signers where their parents had to co-sign on the loan because affordability and interest rates and payments have gone up so much over the last.
Listen, y'all, I see everybody talking about, oh, when I bought my new home and my mortgage increased and I didn't know my mortgage was going to increase. Let me give y'all a story time. So we're at the closing table. They say your mortgage is going to be $1,907. We're like, oh, dang, okay, you know. And, of course, we did put a certain amount of money down to make sure that our payment did not exceed $2,000. So it's good to feel that you could do that, right? Interest rate 2.9. By the way, this is back in 2020. Brand new home, 2,600 square feet. I mean, all that, right? And I'm not expecting any hiccups because my mom has purchased new homes more than once. Cousins, aunties, uncles all purchased new homes more than once. And the thing that they don't tell you is the home does not come with blinds. The home, new construction, doesn't come with a refrigerator. It doesn't come with washer and dryer. You can add some of these items and it's going to be a cost. It's going to be a higher cost than you going to buy it yourself. So we didn't expect all of these extra costs. So as soon as you leave the closing table broke and happy, you got to put out thousands of dollars more. That puts you in debt, or your credit, you're going to run up your credit, because once the house go on your credit, it's going to be harder for you to get anything approved because you're going your debt to income ratio, all that kind of stuff, right? They tell you don't run your credit while you're in closing, don't get no new car, don't do nothing new, don't buy no furniture. So you wait and do it all once you close. And we living life good. 1907, you know, the average price for an apartment right now in Dallas is $1,800. 1907? Oh, but after that year went by. After the year went by, I get a notice in the mail saying what our taxes due are. And I'm like, I ain't tripping. We got escrow, right? We got to have escrow. We got escrow. Then I get a message from the mortgage lender that our escrow account is negative and there is going to be an increase of our mortgage by over, y'all ain't hearing me, over $1,500, or you can pay this $11,800 in a one lump sum payment. What?
I have my down payment ready. Here's $12,000.
Oh, okay, great. And how about the closing costs? Do you have that prepared as well?
What do you mean closing costs? Isn't this all you needed?
Well, it's 3% down. So on your $400,000 purchase price, you're going to put $12,000 for the down payment, but you also have closing costs set up when taking out the mortgage. So you can plan for about 3% of your purchase price as well on that. So possibly another $12,000.
I need another $12,000. I just gave you $12,000. I need another $12,000?
You know, if you are covering the costs yourself as the home buyer, yes, that should be about the budget for your funds to close. However, there are some programs available such as down payment assistance, or you can speak with your real estate agent to help you negotiate so that the seller can cover those costs on your behalf.
I just paid our April 1st mortgage payment. We just bought our house in December at a 7.25% interest rate. And I knew that was a high interest rate. It is a high interest rate, but you don't really visualize it in like a dollar form until you start reading your statements. So my payment is $2,480. $225 goes towards our principal. $1,698 is interest, and $556 goes to our escrow account, and that's only paying for taxes because we pay our insurance out of pocket. So yeah, think twice before you buy a house. No, I'm just kidding. Buying a house should be a good investment, but best believe I'm refinancing as soon as I see it down to like a 5%.
Paying a mortgage feels crazy. I am logged into my loan account and we've officially owned this house for a year. So every month for a year, 12 months, I've been obviously paying the mortgage. What's crazy is when you log in, it tells you how much is left on your mortgage. And our mortgage has gone down the equivalent of what I pay in 1.5 months every single month after paying for a year. The rest is just interest. It just poof off into outer space. Basically like paying rent. You never see that again. It doesn't do anything. One benefit is the more interest you pay, the more tax deductions you get, and then the more that you end up paying off the principal over the years, the less tax deductions you get. So I'm telling myself that that's good, but it is really discouraging to be like, oh, I've paid this much towards mortgage this year, and then to log in and say, oh, only about 1 month of those payments actually made a difference in my principal. But I guess that's adulting or something. I don't know.
Hello and welcome to another video. In this video we're going to be talking about mortgage payment and how the mortgage have become so expensive that some people cannot pay their mortgage. How people cannot afford their mortgage even when they have fixed rate mortgage, because some people got in the mortgage where they couldn't afford it and they still got in that mortgage. Some people got that mortgage because they got the mortgage and their situation had changed because all the expenses. You know, food is getting more pricey, insurance for the mortgage is getting more pricier, taxes for the property is getting more pricier, and yes, and things are just going up, and some people just cannot really afford to make the payment. But please don't forget giving a like, comment, and subscribe, because it really helps my channel to grow and it helps other people to find my content and my video. And towards the end of this video, I'm gonna be giving you the whole explanation of what I think about the mortgage, so stay towards the end.
Okay, I'm not trying to say y'all are lying about your mortgage payments, but I need some like clarity. I'm gonna put some photos right here. I'm on the mortgage side of TikTok. I'm I guess on the wrong side, because I can never afford this. Mortgage, $5,300. I'm gonna post all the pictures right here. Mortgage, $2,919. Mortgage, $5,073. I have to recheck. Hold on. I just went back and rewatched those videos. $5,000 for mortgage? Okay, people clap at me like, oh, you chose a camper. Heck yeah! How are y'all... Okay, how are y'all affording mortgage? What? Okay, so my question for you, honestly, what is your mortgage, what's your insurance, and what year did you buy the house? I know the later the year, the cheaper your mortgage is, but $5,000, guys? Like, when y'all signed, what jobs are you working? There's no way y'all are playing, like, everybody on my For You page is like 4,000, 5,000, 6,000. Are y'all really, did y'all really sign that for 30 years? I need to know if this is true or not.
That lady just said her mortgage went from $3,400 to $5,300 a month. Yeah, go and wrap this up. Go and wrap this right on up. I just earned myself a ticket on the next flight out over there to that farm with Wheelbarrow and Charlotte's Web. They better move on over.
So I have to tell you something. I can't afford my mortgage this month.
Are you serious? Are you serious? Why?
I mean, I bought some of that stuff. I don't know.
Are you serious? How much do you need?
Would you help me?
Huh?
Would you help me though?
Well, yeah. I mean, what?
It's a TikTok trend.
The number one way to know that you can't afford a house is if your loan officer keeps telling you that rates are gonna go down and that you can refinance to get a lower payment. Today, I just had a phone call. This is the second phone call I've had in the last 5 calendar days from someone that wanted to refinance because they made their 6 payments that the loan officer said that they needed to make so they could get a lower rate. There is no lower rate to be had. This guy gets on the phone and says, hey, I need to get a lower payment. My payment is too high. I said, well, how much do you need to lower your payment by? He says, by like $700 a month. I said, sir, did you know that you needed your payment to be $700 less when you signed your name on the dotted line for the house? He says, yes. That's when I became very apologetic because I knew he had been had. Loan officers should never promise anybody that the rates are going to go down to a certain number. Loan officers should never make promises or guarantees that someone can get a better payment or a lower payment because we have no idea what the rates are going to go down to. Yes, we did expect interest rates to come down, but for him to be successful in his venture, interest rates would have to be in the 4s. Unfortunately, I don't know what he's going to end up doing. But again, like I said, this is the second person in 5 days I had the same exact apologetic conversation with because I'm apologizing on behalf of one of my colleagues that's somewhere that was overzealous and needed a commission. No tea, no shade, y'all. I be saying this. We are salespeople. So I'm telling you right now, if you can't afford the payment the way that it is when you sign up for it, put the house back.
There are some more reasons why people can't afford their mortgages. When did grapes become $6.99 per pound? When did red plums become $4.99 per pound? And the best one? When did pasta sauce become $9 a jar? I mean, guys, I know that
people are going to lose their homes. They're going to lose their homes. I'm telling you guys, the storm is brewing and it's coming fast. The rate of acceleration on property taxes and insurance is unlike anything anybody has ever seen. People's monthly payments are going up from $1,800 to $2,800, from $2,500 to $3,500. One of two things can happen. You either lose your home to foreclosure because you can't afford that payment, or you try to sell your home so that you can get out of this terrible situation. And the more people that start to now try to sell their homes, the more inventory increases, the more those prices are likely to come down. This does vary state to state, so it's not exactly the same in every state. Some states are in worse situations than others. They weren't kidding. Those f***ers weren't kidding. They said you'll own nothing and you'll be happy.
Hi, this is part 2 of how my monthly mortgage payment went from $3,832 to about $7,200 and change. So the first thing I did is I went on to my mortgage, the website, to see about the escrow, to make sure that I was giving the correct facts, because again, the point is to bring awareness so this doesn't happen to somebody else. So whenever I looked it up, what I saw was that, again, there was a shortage, there was an escrow shortage, and this shortage came from last year as well as this year. So the county tax was projected to be $539, but it ended up being $4,627. And again, that's because when we purchased the home, it was a new build, so they calculated it as it just being land. They didn't calculate it as it being a home being built on land. Again, 100% our fault. I'm not putting blame on anybody. Do I feel that the realtor that I had at the time should have made me aware of this? Yes, I do. Do I feel like the mortgage company should have made me aware of this? Yes, I do. Do I think that they just wanted to sell and they didn't care about it going up and they knew that it was going to go up? Yes, I do. But at the end of the day, it is my fault. It is my husband's fault. We shouldn't rely on other people to do our homework for us. We should have looked into this. But so that was one thing, that tax went up. The hazard insurance, it went up $1,131. The mud tax went up $5,908. The school tax went up $5,671. So the total shortage that we had was $23,311. Luckily, I was able to, thanks to the realtor that I have now, she advised me to call the mortgage company and see if they could do something to stretch that shortage out so that we didn't have to pay it up front, to make that payment, that monthly mortgage payment of the $7,200 go down. So that's what I did. I called the mortgage company and luckily they were able to stretch it out. So now we're paying $5,663 a month, which is still more than we're able to pay, which is why we're still selling it. But luckily, they were able to do that for us.
So the car payment debate continues. I just wanted to share this comment because I think it provides a different perspective, and I think it shows the impact of what these car payments can have on your financial life. And as an individual who's helped thousands of people get out of debt, I see it time and time again. Car payments are typically an item on a budget that is causing a tremendous amount of financial stress. And if you're a family, sometimes I see two of these high car payments. And not only, again, is it causing financial stress on a monthly basis, but it could be limiting you from actually making better decisions with your finances. That's going to help you actually grow your money over time, as opposed to a depreciating asset like a car that's going to go down in value. For those individuals out there who are going to argue car payments and new cars, fine. Hey, I'm not here to convert anybody. You're fine living paycheck to paycheck and having car payments. By all means, keep doing that. But if you're a middle income earner and you're tired of living paycheck to paycheck and financial stress, take a look at the decisions you are making with your vehicles. They can make a tremendous difference in your financial lives.
This was a young lady on TikTok who bought a house, y'all. And in buying the house, her mortgage payment went up just a couple $100. And she is now complaining about how she can't afford her house and she hates being a homeowner.
Yesterday was my 3-year anniversary of becoming a home borrower. I borrowed this house from the bank 3 years ago and I hate it. And some people are asking me why. Why do you hate it? Because I can't afford it. I can't afford this house. When I borrowed the house, I could afford it. And the bank insured that. Since then, though,
property taxes, and then moral of the story is she bought a house, and her mortgage payment at the time was $1,800. In a 3-year period, because property taxes and insurance went up, her mortgage went from $1,800 to $2,200. And now she's saying she doesn't want the house, that she can no longer afford it. Y'all, please forgive me, because if I'm so far removed from the working class individual, and if I forgive me, but in the world that I live in, $1,800 and $2,200 is the same number. 19, 20, 21, 22. For you to be talking about you got to move out of your house, for you to be talking about you have to absolutely move out of your house because your mortgage went from 18 something to 22, that suggests to me that you couldn't afford your house in the first place. All right. I was ready to feel her pain. I was so ready to feel her pain. I was thinking she was going to say, my mortgage went from 1,800 to 2,600. Then we got something to talk about. My mortgage went from 18 to 2,700. And mind you, this is across 3 years. This is across 3 years. It says to me that you bought at the extreme top end of your budget. And HUD, I don't know what type of loan she got. But if she got an FHA loan based on HUD requirements, and all my mortgage and real estate people in the comments, please correct me if I'm wrong. But HUD says something to the effect of 36% of your income is allotted to housing. Is it 30 or 36? I'm going to be generous these days and say in this economy and how high things is, most people is allocating about 40% of their income to their living expenses. If $400 was the difference between you being able to stay in your house and you having to move because you can't, when you use the word, I can no longer afford this, it sends the message to me that you struggling and you about to go in foreclosure. If you about to go into foreclosure over a $400 difference, baby, you shouldn't have bought that house in the beginning. Now, am I right or am I wrong? And if I'm wrong, I don't have no problem being told that I'm wrong. And I see a lot of people saying $400 is a lot. While I do agree, $400 is a lot. You can go to the car dealership. You could buy a Honda Accord for $400. You could put your baby in after school care for $400. You can buy groceries for the month with $400. There are a lot of things that you can do with $400, and I'm not negating that. But if $400 is the difference between you keeping your house and you being foreclosed on your house, then I think something is okay. Well, some people are saying I'm right. Some people are saying I'm wrong. And I don't mean to offend nobody if I'm wrong. And maybe I'm a little too far removed. Maybe. I don't think I am. But maybe I am. I ain't trying to count y'all pockets. I just wanted to tell the story. Maybe I am wrong. I'll stand corrected if I'm wrong. I just don't think personally $400 should make a person have to get up and move out their whole doggone house if they were able to afford the house in the first place. God forbid your water heater go out. God forbid your air con. And hold on, you know what? I'm going to be honest with y'all. When I was saying I was wrong, somebody just reminded me, no, the hell I ain't. Her mortgage went up $400 in a 3-year period. To hell what you say. $400 across 3 years. Baby, you ain't figured out no way to make no more income in 3 years. You ain't figured out no way to braid a couple heads on the side or drive a damn piece of Uber in 3 years. I'm going to tell y'all something. No, now y'all don't got me started. Some of y'all just weak as hell financially. Some of y'all are weak as hell. Some of y'all are lazy as hell. And some of y'all refuse to take on what it takes and possess the grit to do what you have to do to survive. I don't mess around and got mad. I don't mess around and got mad. You did the hardest part, mama. The hardest part was buying the doggone house. And you mean to tell me across 3 years, you're going to let $400 make you lose it? You mean to tell me you're going to let $400 make you lose your house? If you don't get your ass in that damn car and drive Uber, Funky, you don't own a home. I don't have to own a home. I got $4,000 in rent. I take care of family members, and I got about $10,000 a month in bills. I don't have to own a home. And even if I did own one, $400 wouldn't send me into foreclosure. And to those that say, Funky, you don't own a home, my rent went up $800 in 1 year. In 1 year. And I was able to accommodate it. So miss me with that, you don't own a home. Y'all love, you don't have kids, you can't speak. You don't own a home. I got money. I got $400. I can talk about $400. I can talk about $400. Okay? For those who can say you don't own a home, what's the difference between my mortgage going up $400 and my rent going up $800 in 1 year? It's the same difference. The money got to come from a bank account, whether you rent it or whether you own it. Okay? So that makes that argument null and void. Nevertheless, I'm here to hurt feelings right now. You sorry as hell. You are sorry as all hell. You are one sorry individual if you don't figure out in a 3-year period how to come up with an extra $400 a month. You sorry as hell. You're sorry. You're sorry. There's no excuse for it. There is no excuse why no able-bodied individual in the United States of America cannot figure out how to earn an additional $400 a month across 3 years. Across 3 years. I was willing to work with you. I was willing to work with you when it was 1 year. I was able to be generous and be sympathetic. $400 across 3 years, y'all. Come on now. Come on now. Come on now. You could drive Uber a couple hours a week and make that. But if you want to go ahead and sit on your ass and complain on TikTok about $400, then go ahead and lose your damn house. That's a dumbass reason to lose your house. And for those of y'all who are in the same situation, if you think complaining and getting out here in this current market is better, then go ahead and lose your house and holler at me later. It's hard out here. You in your house that you bought 3 years ago, you doing better than everybody that's renting right now. And you gonna mess around and you gonna lose it and you gonna enter into these waters with us over $400, girl, it's gonna cost you $2,000 to move. That's what it's gonna cost you $2,000 at least to move. And then you're gonna have to put down first, last, and security depending on where you're going. You're going to have to come up with more money to relocate and settle than it is for you to pay your existing mortgage. You better figure it out, sis. Figure it out.
Yes, and I was totally... Sorry, my makeup is a mess. I went to sleep, I fell asleep, and then I started to record the video, and I just make a mess of myself. Yes, one of the reasons why it's so difficult to afford the mortgage is because things are like changing right now. It's a lot of people getting laid off. It's also a lot of people that had to pay really expensive cars. So some people waited to get the mortgage, and then after they have the mortgage, they start buying these cards with the big loans, okay, like $1,000 car payment. So those people are stuck with those car payments for $1,000, and they don't have the money to pay it. Also groceries, okay, we're paying double the money that we used to pay before for groceries because everything is so expensive. Eggs double the price, meat double the price, everything is double price, okay, for the food. So we all paying more money on the food in the groceries bill. The electricity is getting more expensive, the gas is getting more expensive, our gas for our cars is getting more expensive, insurance for cars are almost double, and it seems now that we're just gonna lose Medicaid, we're gonna lose food stamp, we're gonna lose a lot of things that people have for they can just keep their health care and their coverage. Oh, health care is getting more expensive, double the price. So all those things wait on the people if they can afford their mortgage or not. All those things have a relationship on the if people can afford their mortgage or not. And also, it's not only about the mortgage, it's about people be able to live too, because if you're just gonna work for only pay the mortgage, so what kind of life is that? What kind of life is that? I was talking to a friend few days ago, and she was just telling me, I feel like I just only work for I can just pay my mortgage. If I know if I don't go to work one day, I just gonna I can lose my house. So I just keep on working. I just don't have no rest. Yes, and it's just really difficult to live that way. It's a really hard life. But please don't forget giving a like, comment, and subscribe. It really helps my channel to grow and helps other people to find my content and my videos. Thank you.